crypto industry locking in a major win with last week's passage of the Genius Act by the Senate. The legislation establishes the very first federal framework for dollar-pegged stablecoins. Circle Internet, Coinbase, and Robinhood seeing massive gains around the vote this month. And our next guest says stablecoins will be the currency of the AI revolution. Joining us, Alchemy CEO Nikil Viswanathan, whose company powers stablecoins for names like Circle, JP Morgan, and more. Nikil, great to have you with us.
Thank you for having me.
What was interesting was to hear about the companies who are interested in issuing their own stable coins and how the payment processors reacted to those potential stable coins hitting the market. So we saw Visa and MasterCard drop when Walmart and Amazon said they were going to issue their stable coins. How do you see, if you fast forward 5 years, are we going to be dealing with a host of stable coins out there issued by various retailers and companies trying to get consumers to transact on their specific stable coin?
That's a great question. So maybe stepping back a little bit, I think the crypto industry and stable coins will evolve in two ways, just like the internet industry did. Existing businesses will have their financial systems upgraded, so the banks, the financial institutions, and then you'll see new types of applications that are completely from scratch that were never possible before. And in terms of the stable coins, we will actually see stable coins disappear, and the user experience will just be about moving money from one person to another, and you won't even have to worry about the technology. Well, no stable coins have succeeded when the technology is no longer even talked about.
Give us a sense, for some of the newbies or the normies, whatever you want to call us here, we're seeing all these companies that we know in the financial institutions. They're kind of moving here. They were kind of slow to do so. What do you think the risks are, right? There's going to be lots of different stable coins, and there's going to be B2B applications. There are going to be B2C applications. What are the risks? Because we've seen big blow-ups in the past. Obviously, Tether was one of them.
Yes. That's a great question. I think it's really important to split apart a core technology versus the applications of the technology. If you look at the dot-com bubble, there were several companies that were not real businesses that died, similar to the ICO boom in 2017. I'm sure we will see stablecoin applications that are either scammy or not technically sound that die, but the core underlying technology is very solid, and that's what you saw with the internet. Just because there was a dot-com bubble didn't mean the internet died. It just meant that some of the applications weren't high quality.
From a consumer, I can understand the desire to have a stable coin from a retailer standpoint, et cetera. I mean, the settlement time is going to be reduced. The cost to transact is going to be reduced tremendously. It's going to be crushed, basically. From the consumer standpoint, we are so used to credit. We are really attached to our credit card rewards, and we can easily move money. I could give money to Tim right now via Zelle or Venmo for free. So can you make the case for that application, consumer-to-consumer adoption?
Yes, that's a great question. So the first piece of it is that stablecoins is really an infrastructure technology. In the future, it's not going to be something that people think about. They won't think I'm using a stablecoin. They will just be able to move money seamlessly between one person to another. And you're right, you can Venmo someone if they live in the United States and you have their phone number and you have a way to contact them to get their information. However, if you want to send money to someone in France and it's $10,000 and it's Friday night, the fastest way to do it is get on a plane with a briefcase of cash at JFK and land in Paris. So what you'll see is a complete rewiring of the entire financial system built from the ground up that replaces the rails that were built 50 years ago, and changes throughout the experience will be made because of that new technology.